conversations continue here at Davos 2025, and joining us now is the chairperson of HCL, Roshni Nada. Roshni, many thanks for joining us here on CNBC TV 18. Let me start by congratulating you because Brand Finance has just put out its report, and HCL Tech has emerged as the world's fastest growing IT services company or brand in 2025 for the Global 500 and IT Services Top 25 report that's been released in Davos. So congratulations on that.
Thank you. Thank you. I've also just heard 5 minutes ago, so I'm processing it, and 2025 has just begun.
2025 has just begun, but
so
2024 ended strong for you.
Yes, it did. And so a lot more to live up to.
Mm-hmm. So, you know, as you speak to clients here today, whoever's here in Davos and not in the US still after the Trump inauguration, the buzz that we're getting from other tech companies that we're speaking to is that 2024 was good, but 25 is expected to be even better. Is that your sense?
Yes, I think there was a certain element of unpredictability in 2024, and I think there were lots of customers, clients, and companies waiting to see what unfolds. There were, I think, more than 60 countries going into elections,
yes.
Right, culminating with the US, and I think that now it's back to business and back to strategy and implementation. So we expect 2025 to be better.
You know, when you talk to CVK as well, and the feedback that you're getting in terms of the Trump administration's policy changes, deregulation is one of the big promises being made. Do you see that as an opportunity where, you know, companies like yours are likely to benefit from this move towards deregulation?
Absolutely, and the opportunities that we could get in public sector. And I think there have been some American companies which have been much stronger in that sector, but as they look at optimization across all verticals, I think there is an opportunity for us as well. And Indian companies anyway in the private sector, in IT services and software, have been in the US now, you know, almost 40 years.
Yes,
you know,
over 4 decades. Yeah.
And in fact, for all Indian organizations and US-based organizations, in our particular industry, their largest talent bases are out of India. So we're quite married.
Yes, to the US story.
Yes, very much. Yeah.
No, but you know, that's an interesting aspect that you brought out about the public sector opportunity that could potentially open up under the Trump administration. Has there been any indication of what it could potentially mean or lead to?
So I think there's already opportunities which are much more state specific, but I was referring more to federal, and that obviously has to be seen because they've come the DOGE, the Department of Government Efficiency Bureau, and we're hoping that we will be able to you know, tap into some of those opportunities. Of course, has to be seen what it is, but on a state level there are certainly opportunities. At a federal level, it would be good to see what we can dip our beaks into.
Yes, you know, speaking of the US, and of course you have been hiring in the US like many other Indian IT services companies have. Do you expect that to go up significantly as you try and service this market and service some of the new opportunities that open up?
Well, I think it depends on the opportunity. Like I said, I think Indian service to the US customers from India is quite a recognized norm. And we have a large workforce in the US, 80% of whom are actually Americans. So our dependency on the visas is also quite low. So
what is the current dependency on the visas?
About 500 to 1,000 annually.
Okay.
And on a base of 30,000. So it's extremely low. And it'll probably become lower as well because again, it's hybrid delivery. So you'll have some talent sitting out of the US, a larger execution and delivery talent sitting out of India. So I think that it would.
So that's not a risk then, even if there were to be, I mean, already we've seen changes being announced, but anything more, it's unlikely to be a risk as far as you're concerned.
In fact, it will be good because we want to grow in the US as well. As it is, I think, for our portfolio, it's our largest market. So, you know, it's always been an intent for us strategically to want to grow in the US, you know, and sometimes that could be at the back of acquisitions as well.
Is that something that you're actively considering at this point in time?
Nothing, but I mean, I'm reflecting on our past, and that's how we've sometimes gotten talent as well, and it's been through a lot of joint ventures and partnerships and acquisitions.
And acquisitions as well. The US is looking strong. What about where we are, Europe?
You know, few countries in Europe, few verticals, banking, tech, there are green shoots, and you know, I think it's where you're present. And in fact, in our top 5 customers, 2 happen to be from Europe and growing steadily for us. So I think it's focusing on a few countries. I think if you look at overall Europe, I mean, from what I'm hearing from some of our European clients is also looking at the situation in Europe and how they have to bring in efficiencies and sort of get house into order. So there will be opportunities there.
There as well.
Yeah.
So the deal pipeline continues to look strong?
It's all-time high.
Yeah.
It was all-time high this quarter gone by. So it continues to be really strong for us.
How do you better on that? How do you move from an all-time high to an even higher all-time high?
So I think newer geographies. So in fact, I was just reflecting and looking at our numbers today that the rest of the world for us as a percentage, including the Middle East, is greater than Europe. And so I think, and we still haven't really penetrated those countries as much as we could, you know, especially in the Middle East, Japan, somewhere where we are quite small. So I think that there's opportunity there. You know, we just have to have more of a focus.
And is that going to be a big focus
Yeah.
in 2025?
Absolutely.
Yeah?
Absolutely.
Any specific areas that you intend to chase after?
Engineering services, and specifically in Japan, you know, there are some government opportunities, public sector opportunities, Australia and New Zealand, financial services, and then the Middle East as well. And Middle East, I think we have opportunities in the UAE, but Saudi.
Okay, so that's a wide range of...
Yeah, but I was just, it's never happened to us before, so I was just looking at the percentages and I just think that it's a good place to be.
Yeah.
We should only grow from there.
So let's talk about what's happening on the AI front as far as HCLTech is concerned. You know, what you're doing in terms of future investments, further investments, and how much of it is it already part of the existing DNA now at the company?
So the way we're strategically looking at AI is we've broken it into 4. So we've got our AI force, and that's you know, looking at the software development life cycle and the kind of efficiencies that we can bring in that, whether it's with our customers or whether it's even the work that our own software engineers do, and how that kind of efficiency that can be brought. Then we've got AI labs that we globally opened. We're now at we've got one in Santa Clara, New Jersey, London, Munich. I just inaugurated 2 months ago one in Singapore, and we've got a few in India.
Okay.
So that network is also of AI labs is also going to grow, where we can actually cross-leverage solutions across verticals from different geographies for customers in other geographies, but similar verticals. We've got our AI Foundry, which is, you know, innovation in infrastructure as well as managed services for existing companies and customers. And then the last is our AI engineering, which is the whole semiconductor life, AI chips engineering, and the kind of skills we're going to need for that. And I think at the beginning of the year, we had started on a target of upskilling 50,000 in AI skills. We're on track for that. Now I think that I think for all companies out of India, there's a lot more we can do with AI, but we also need the funnel, which is where freshers to come from, the academics to catch up.
And you know, the academics catching up, you're in the academic space as well, so how do you marry the two?
It's very difficult, Shireen, because I think that, I mean, we've got 2 universities, and our largest programs at the moment are data science as well as computer science, which is what actually feeds itself to this sort of talent pool. But of course, our numbers as 2 universities, as a private university, is very small. But you look at the larger landscape of, you know, I think Tamil Nadu has some 900 engineering colleges, Andhra has some 800. That's where most of the talent is coming from. And then, of course, you've got the larger states like UP and all. But integrating that into curriculum, taking it back into your third and fourth year of engineering, that requires a huge overhaul of just the education system. And you know, the IITs are the best students, so they anyway get placed.
Yes.
But that's not where majority of workforce comes from.
No, it clearly doesn't. But you know, speaking of the workforce, do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it. So that's something that's still not back in education system. That's still the training that we have to go through. And in engineering services, our training is a very long, it's 6 to 9 months before we can actually get an engineer ready to actually deliver to our customer. So, you know, just shrinking that. And so I don't think we're going to slow down, but we have to upskill more and get ready talent also.
Yes.
So it's not just going to be freshers, but it's also going to be, you know, maybe people with 3 to 4 years of experience, a little more.
So the skill gap is a significant challenge as far as the industry is concerned. What would be some of the others as you look ahead?
What would be some of the other challenges? I think skill gap mostly. Because I think that the demand environment is robust, and I think one way or the other, every company in the industry, in any vertical, is going to have to look at their transformation, whether it's at the back of digital, AI, whatever, what have you. And also global growth challenges, looking at cost optimization and some of these levers. So I think we'll have opportunities, but as long as India continues to be a talent hub, which we know it is, and it's not only because of us, but it's so many, I think, thousands of GCCs which are opening in India, I think that puts a lot of pressure on the system.
It's been an absolute pleasure. We wish you the very best of luck. Thanks very much for speaking to us here in Davos, and we look forward to seeing you back home to talk more about all the interesting and exciting stuff that you're working on. But thanks very much for your time.
Thank you.
We will take a break here in Davos, but come back with more conversations. Don't go anywhere. We're back in a moment with plenty more. Welcome back. You're watching our continuing conversations here from the World Economic Forum's annual meeting, Davos 2025. And joining me on the program is Raghuram Rajan. Mr. Rajan, always a pleasure. Thank you so much for joining us here in Davos. Did you stay up all night watching President Trump?
I didn't. I read about it in the papers this morning.
And what do you make of the statements that he's made so far and the executive orders that he has passed so far?
Well, I think, you know, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, you know, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, you know, it's not going to happen in a big way. But nevertheless, those are the beliefs which are driving this kind of you know, for the world's strongest economy at a time when it is doing really well. to believe that it is being imposed upon by the other countries in the world, I think is a little stretch.
Well, he has said that tariffs are his favorite word in the dictionary, and of course there is ambiguity on the timeline as well as the rate that he's likely to impose, and we will have to wait to see how that plays out. But what will it mean in the near term as far as global trade and investment is concerned?
I think it first creates a lot of uncertainty, because I think Mr. Trump has met a lot of threats with, I'm going to impose tariffs, including immigration, including the drug trade and so on. And so I think even friends of the United States are very worried. Of course, Canada is the best friend the United States has had. So it creates uncertainty in other countries. It also implies cross-border investment is so much more difficult. Where are you going to put your investment if you're not sure what the tariffs will be going forward? There's also the issue of retaliatory tariffs, which we right now don't know about. How much is China? How much is Canada going to retaliate? All of this implies big question marks on global growth. I think the US is fairly confident with the strength of the economy and the kind of stimulus that has been behind it, that it will continue. That also is a source of worry, because the Fed hasn't had much effect in slowing the economy. Maybe this round of tariffs will slow it. It's not clear. But with the Fed having little effect, with the markets at plumbing all-time highs, with even those Trump tokens and Melania tokens selling for billions, things are looking a little frothy, but also the uncertainty could bring all that froth down.
Speaking about the Fed now, what do you expect in terms of rate cuts, given where we find ourselves at this point in time? There are some expectations that perhaps there will still be one rate cut in 2025, and others believe that there is no space for any. How would you read the situation?
I think markets are reacting a lot to every inflation read they see. And every month brings a new view. What is undoubtedly clear is the labor market is strong, that firms, instead of laying off people, are not hiring as much, especially very skilled MBAs are finding it a hard time getting jobs. But I think the economy isn't slowing in a material way. The hope was inflation would come down of its own accord. That would be the soft landing part, but it's stabilizing. Of course, people can read the leaves and see, well, housing is coming down, maybe that'll bring things down. I think there is no reason to be comfortable that inflation is coming down on its own. And if the labor markets aren't, showing signs of slack, and maybe may tighten up if there are these actions against immigrants, I think the Fed has its job cut out, which means it's going to stay higher for longer. So I would not be optimistic at this point. Yes, you may see a cut, but I think right now the Fed wants to wait and see what are the policies that are going to come in, and how much is its job going to be done for it by the ebb of the economy, and how much will it have to react more?
Well, speaking of policies, I think there are expectations of deregulation for the financial sector as well, and that is something that President Trump has promised. But as a former central banker, where do you believe deregulation is needed at this point in time? Perhaps to do with capital requirements, at least that's what the bankers are suggesting. But outside of that, what would concern you about too much deregulation?
Well, I think on the front of capital requirements for the big banks, I sort of tend to believe that that's not where the problems are right now. And important to say right now. The problems were with the small and medium banks, and in reaction to that, we imposed more capital requirements on large banks. I don't think that's that sensible. We need to examine what happened with the small and medium banks, why they took the risk they took, and perhaps act on that. But I think
so there is, you're saying the fact that there should be looser requirements as far as capital goes for big banks, that is a justified ask.
I'm not unsympathetic with that. I think the fact is we have piled on a lot of capital requirements on the large banks, and in fact they've now shying away from bread and butter lending and doing other stuff. So that is something that, you know, probably shouldn't be the case. But I think if you look at where some of the deregulation is proposed, or in fact bringing things into the mainstream, it's on issues like digital assets, like cryptos and so on. And there I think you have to be a little careful. This is an area which has already seen a substantial amount of asset price appreciation. And, you know, you want to think about whether, you know, for example, you want to create a reserve.
Yeah.
I mean, when you usually create reserves of assets that are stable in value, cryptos haven't been particularly stable in value. And so in that sense, I'm not sure what the point from the US's perspective of creating a reserve, other than adding, in a sense, more buoyancy to a market which is already quite buoyant. I do think digital assets may become a source of payments, and, you know, it's worth exploring that and trying to give some leeway for experimentation, but it has to be done carefully. And it is something where even the digital asset issuers want some regulation so that there can be some confidence in what they're doing.
Well, you know, speaking of digital assets, let's talk about what's happening in India. The RBI, of course, has been vociferously anti-cryptocurrency in India, but they've, of course, been betting on the CBDC. You know, India's position on this and your approach, what do you think we should be looking at?
Well, I think that the regulations for CBDCs are being decided in Basel, and it's important we have a seat at the table. You don't want to be outside the discussions and the negotiations. I think with UPI, we have a means of payments between people, which is largely a public platform and is very cheap. And therefore, the value of a CBDC, which is a way of making digital payments between people faster and cheaper, may be limited at this point. As we go forward and we figure out things like smart contracts and how to layer them onto the CBDC, maybe there's going to be more of a role for a central bank digital currency. But right now, I think much of the payment function that we need is already being performed within the Indian banking system at relatively low cost. So I think it's important to experiment with the central bank digital currency, but I don't think there's a crying need from the market saying we need it today.
We need it today. Yeah, you're right about that. But, you know, let's talk about currencies and move away from cryptocurrencies. And we have, of course, seen, you know, currencies across the world depreciate on account of the dollar strength that we are seeing. The last few weeks, we've seen ostensibly the RBI sort of pull back, and we've seen the rupee depreciate. What's your own take on what the road ahead looks like and what the approach of the central bank should be?
Well, I think the beauty of inflation targeting that we've adopted is that you keep inflation under control, which allows you some flexibility on the currency. And sometimes currency adjustment is very useful in making the real adjustments. So, for example, if tariffs are imposed on Indian goods, it's very important that we allow the rupee to depreciate somewhat to offset the effect of the tariff on our exporters. So you don't want free fall. I think the RBI has always said it's against volatility. But allowing some depreciation, especially when the rest of the world is depreciating, makes sense, because then you give your exporters a fair chance.
What would be an appropriate level, you think?
I think keeping the nominal effective exchange rate, I mean, from a competitiveness perspective, what matters is the real effective exchange rate, correcting for inflation. I think watching that and making sure that we don't look overly appreciated from that perspective vis-a-vis all currencies. That's what we should be looking at. Unfortunately, from the RBI's perspective, everybody's looking at its rupee's value against the dollar. And they're measuring it on a day-to-day basis. But if you look at the rupee against the euro, we're not doing so badly. So I think the RBI has to explain to the broader public, look, we're looking at all the currencies, and given all the currencies, we're not in too bad a position, and there's no need for constant intervention unless we feel the rupee is depreciating too much.
Raghu Ramanujan, always a pleasure. Many, many thanks for joining us here in Davos. Thank you very much for your time, and we look forward to speaking to you again soon.
Thank you for having me.
Well, with that, it is time for us to wrap up this CNBC TV 18 special conversation. We will continue to bring you more voices here from Davos, but for now, a quick break. We're back in a moment.